News 8 at Sunrise in high definition continues.
And welcome back. The CPA Ken Hall is back with us. Ken, good to see you.
Good to see you, Mark. Good morning.
Yeah, good morning. So we're talking about tax tips for back to school this morning. Dreaded subject for some, perhaps not for others. As kids head back here in the next couple of weeks, let's talk about tax tips for parents and guardians, especially for those grade school kids.
Okay, I guess the main one is child care credit. So if you have a child in the IRS size that's less than age 13, you can deduct up to 20% of $3,000 of child care that you pay for one child and double that for 2 or more children.
Is there a maximum for that?
Yes, your adjusted gross income has to be 43 or lower, and you have to have a registered child care provider.
Anything else we should know about that credit?
Well, it's clear that it has to be done. It can't be grandma or big sister. It has to be done by a professional organization that issues you a statement at the end of the year with their tax ID number, so the IRS can connect the dots.
Got to account for it. What about some other tips? Let's talk about school fundraisers.
Yes, if you contribute to a fundraiser, you can deduct the amount less anything that you receive. So you may receive a meal, you might get a calendar. You can't deduct the value of that.
But anything else you can?
Yes.
Okay. What else about things we may think are tax deductible, but as it turns out, perhaps they are not?
Well, private school tuition and private school uniforms are not deductible.
All right, so those are on the list. Any exceptions there?
If you send your children to private school and it includes a component of before school or after school care, that flows into the child care credit.
A lot of kids will be heading off to charter schools, uniforms there. What about school uniforms?
Not deductible.
Okay, so not deductible.
Yeah.
Are there any exceptions that would allow somebody to get a credit or a deduction on that type of an expense?
Well, there is a program called the Educational Savings Account, which is an IRS rule where you can, as a parent, contribute money into an account as your children are growing. And the money you put in, there's no tax deduction, but the earnings on that money is tax deferred or tax deductible to the extent you use that to pay for private school tuition as your children grow.
Okay, and then final thoughts on this subject before we let you go.
I would say that the child care credit or the child care credit is one most people should have. Most people do that. The educational savings account is a little trickier because if you don't use it, it gets trapped and then you pay tax on the way out. So, you know, be careful, talk to your CPA or your financial planner. And there's also a topic for another Monday, a Section 529 plan. Those are great.
We've touched on those through the years as well. We'll leave it there this morning. Ken, it's always good to see you. Thank you.
Thank you, Mark.
If you missed any of our conversation, we're sharing it online as well. You'll find it at rochesterfirst.com.